All right, guys, we are live and okay, we are live. Okay, perfect. Okay, I'm using a different platform this time around. So, in any case, S&P 500, it was up today. It was up today 0.7%. Nasdaq lagged the rest of the market 0.6%, and then of course you had the Russell 2000. It was up 0.8%, so it actually led the whole market today. Breadth wasn't that great, not from what I could tell, man. It was pretty sketchy. In fact, the breadth was about 17 to 14. So you had 17 advancing stocks for every 14 that were declining. Usually if you have like a day like today, you would see about 2 stocks going up for every 1 going down. You weren't at that 2-to-1 ratio. Instead, you were much closer to a 1-to-1 ratio, which means there was a lot of stocks still selling off today, despite the fact that the market was rallying. Now, the interesting part is that there wasn't a lot of good strength in your tech stocks today. For instance, like Apple, it was down 1%. That's quite surprising that it was down 1% and it didn't take down the whole market with it, because remember, we're talking about like a $3 trillion company, right? So $3 trillion company, it held its own pretty well today, and it managed to not drag down. Well, a $3 trillion company sold off, but the market held its own today despite the fact that Apple was down as much as it was. So pretty interesting show today. 2/3 of the profits by the end of the day came in the last 15 minutes. I mean, it was like a 21-point ripper into the close. The S&P was up about 31 points overall. So that was kind of interesting as well. So there's a lot of back and forth today. Most part, the market stayed in positive territory throughout the day, but nonetheless, I added a little bit of short exposure today with QID. That's not working so far. The short positions that I've been holding with the Nasdaq and with the S&P 500 coming in today, those are still doing fine. It's just the freaking QID that just kind of ripped me up a little bit today. Didn't hit the stop loss at all, but it's a little bit closer to it than I would like for it to be. So with that being said, let's go ahead and look at these charts. Remember, what I want to do here is I want to go over each of the major indices. I'm going to go over the S&P, the Russell 2000, the Nasdaq, go over some different indicators and charts that are intriguing to me. Then I'm going to go over your stocks, your questions, your charts, and we're going to wrap it up after that. So make sure to post down in the comments below what your questions are, the comments, and everything else, and we'll get to each and every one of them. So let's go ahead and look at the S&P 500 here. So with SPY, we've been talking about this rising trend line. It goes all the way back to mid-June, and so far this rising trend line continues to hold like a champ. I mean, it broke below it just a little bit. Maybe you could just say it didn't really break. It was like practically right on the trend line. I mean, basically whether or not it broke below it would depend on how thick the line was on your chart. That's how essentially it was right on that trend line. Managed to bounce the next day, followed through again today. So now what I'm watching for here is this 10-day moving average. Again, until the last minute of trading, we were trading below this 10-day moving average. And so the 10-day moving average, you can see, you go back to here where we had Jackson Hole on August 26th. That one saw a rejection at the 10-day moving average, and then you've just seen in times past where it's also acted as support like it did here on August 9th. So, and again here on July 26th. So there is about 2 months worth of history with price bouncing off of the 10-day moving average or seeing resistance at the 10-day moving average. Today we just barely closed above it, and that was essentially because of the last 1 minute of trading. I kid you not. And by the way, what am I having to drink here while I'm doing this podcast? I'm doing George Remus, man. Let me tell you, where is this bottle? This stuff sucks, man. I don't like it. I took one swig of it, and it's not that great. So I don't know how often or how much of it I'm going to be consuming during this podcast, or not podcast, but this live stream, just because it's not that good. But I'll give it a shot anyways. Anyways, let me pull back up my charts. I'm having a little technical difficulty here at the second. I need to pull open my workspace. Let me get that here, and then we can keep this show going. All right, so back to SPY. Let me pull up that. So on SPY, that rising trend line still intact. We got the follow through today. You still have a lot of resistance there at the 50-day moving average. Look, on August 31st, and again on September 2nd. resistance there when it tried to break back above the 50-day moving average and hold it into the close, saw significant selling. We're just underneath that there right now. So I don't know how high of a confidence level that I have that it's going to be able to break through, but nonetheless still very much worth watching. Now let's look at the Qs. Qs broke this rising trend line, right? We've highlighted that before, but check this out. It is right underneath this rising trend line now, so it wasn't able to break through it, and it wasn't able to break above the 10-day moving average. So unlike the SPY, which was able to slightly break above the 10-day moving average, you got right up to it and then it sold off some. And you got the same history. 10-day moving average from Jackson Hole saw a price resistance there, price support from August 9th, and then on other times past as well where it's held up support there. So I still think that the 10-day moving average is significant going into tomorrow. 50-day moving average a little bit further away, but you also got this resistance, and it's almost converging here with the 10-day moving average. So there's this resistance here going off of the June lows that it's already broken, plus this 10-day moving average creates some issues for tech going forward. Tech was not strong today at all. Most of your strength was in financials, healthcare, materials. Tech was like up, but it was only up a little bit. And then you had the laggards, which was kind of interesting. It was staples, utilities, and communications. Those are like your safety plays. So the market actually wanted to get out of those safety plays, but didn't want to get into tech. Kind of interesting, because usually when you see the money leave those particular industries, you see people wanting to get into tech, and that didn't happen. You had a little bit more strength in discretionary, but very little in tech today. So something, again, worth watching tomorrow. If you still see tech weak and you see Apple weak, good chance that you might see a pullback in the market. So so that's what I got to say about the Qs. Let's look at Russell 2000 here. Russell 2000, again, I mean, you got this strong support level here. Rising trend line off of the June lows. I said that might be the bounce level for the market. I was scaling out of my short positions when we were getting towards or closer to that level. So now I'm looking at trying to be more aggressive with adding more shorts that now that we've got in that bounce. We'll see if that plays out in my favor or not, but that's the plan anyways for right now. Declining trend line there, so if you do get a big rally tomorrow, watch this declining trend line. Can it break through that? Much better strength in the Russell today versus all the other indices. Really strong move, but again, underneath the 10-day moving average, underneath the 50-day moving average. Same rules apply as it did with the NASDAQ and the S&P 500, that it has some resistance there at the 10-day moving average. So that's what we want to watch for. Also interesting is that the 10-year yield, right? TNX is what I use on to get the Treasury yield. TNX up today 0.8%. Was it like what it was up on Tuesday? No, but it rebounded following the significant selling yesterday. But the market was really unfazed by it. Didn't really care much about that. But you still have a nice solid trend line in place with TNX. It bounced off of it today and kept on moving. How about the dollar? Dollar is going to cause problems for the market too, as long as it continues to strengthen. Well, again, you had a bounce off of its short-term rising trend line, and it's holding it so far. So not as good as what we saw in the 10-year, but nonetheless, it's holding up pretty well there. So that neither of those two factors are good for the market. So you got that. Then you got the VIX. VIX is a little bit. It just doesn't seem like it wants to get too excited about anything these days, honestly. It's just been putzing around in this like 20 to 26, 27 range. It got down to about 18 or 19 during that epic rally off of the June lows. But you would kind of think it would be maybe around 29, 30, but it's not. I mean, we are nowhere close to getting back to that 33, 34 level where some of your major reversals take place in the market. So that's something to also keep an eye on going forward. So there you have it. Oh, let me show you one more chart. T2108. 38% of stocks still trading above their 40-day moving average. We're not oversold on that. Nowhere close. I mean, you want to talk about extreme oversold readings. T2108, which measures the percentage of stocks trading above their 40-day moving average. You get that down to like 5 or 6%. Then you're talking about some serious oversold levels there. We're not there yet. If you look at the SPY, and this is the last ones we'll talk about before we get back looking at y'all's charts. SPY on the weekly, okay? This is a weekly chart. 51 on the stochastics. 20 is oversold, just the beginning of oversold. You take a look at the Qs, we're at 47. And you look at IWM, we're at 53. So are we necessarily oversold? No. On the daily, yes, there's been some oversold readings. Those are even being alleviated some with the buying over the last 2 days, where you've seen the NASDAQ get back above 20 and the S&P 500 hit up to 24. So I wouldn't call us necessarily oversold at this point, especially after the last 2 days of rally, of the market rallying. So let's look at some of the stuff. First of all, we got Super J here in the house. Super J, what do you got to say here? Hi, Ryan. Thank you for all that you do. I love your podcasts and YouTube videos. Thank you very much for that. And he says, continue with the great advice. Could you look at FNF and MU? Good, interesting companies here to look at. One's Fidelity. Not a bad brokerage platform either. I mean, I have a brokerage platform with them. They've been pretty good for me over the years. I don't necessarily think they're the best for trading, but long-term investments are pretty good. So you could make the case here with FNF, right? Well, I mean, you go back far enough in time, going back to 2020, nice long-term rising channel. That broke at the beginning of this year. You got the declining trend line. That broke too when you had the rally off of the June low. So let's go ahead and get this out of there. But now you got this triangle-like pattern. So I talked about this too on the YouTube membership, which you guys can click by hitting join down below. You're going to get a whole bunch of extra videos each and every day, like a couple of them every day, and plus watch lists and all that good stuff. But ESTC, this one had a nice triangle pattern as well. If you look at it, if I can draw it right, fix this one up a little bit. There you go. Triangle pattern, trying to break out of it. Hasn't quite done so yet, but, and then I just messed that one up. Let me pull up workspace history. There we go. Every once in a while, guys, I got a new keyboard and I'm getting a little punchy on these keys. So again, FNF, triangle pattern, left shoulder, head, and then you got the right shoulder here. Neckline going right across. So it needs to get back above like 41 to really consider a long position. One thing I would say is that the banks have been looking a lot better in recent days. It's been leading the market. I mean, today it was phenomenal. XLF up 1.7%. I mean, and that's against like the S&P 500, which was only up 0.7%. So that's a strong reading there for the financials. But so left shoulder, right head, and then right shoulder. Right shoulder is a little bit dilapidated in that regard, but there's really no move. From a stop loss standpoint, I'd probably say below the 50-day moving average. That seems to have a little bit of support there. Now, what else are we looking at here? MU. Semis have not been great. Let's look at the semiconductor industry first. Massive support level there, broken, trying to retest it, trying to recapture it. This can be taken out now. But if it's really going to get somewhere, it needs to break back above this like 246.50 level. Right now, it's nowhere near doing that. That would be like more than a 10% rally. So with MU, and you can see I mark this sucker up all the time. Let's get a fresh slate here. Actually, let me go back to some of my notes on this one. So you have the big double top here, right? And this is really what's guiding the stock at this moment. Trying to make that as snug as possible there. This is your guide right here on MU. Massive double top. Tried to recapture it, couldn't do it, sold off instead. So now you're really in this like sideways phase here. Are we going to try to make a double top here and then try to make a push back up to 64.89, which would 90, which would confirm the MU double bottom? Or are we just going to have a breakdown? I still think there's a lot of weakness left in this market. I don't think it's fully priced in everything that the Fed's trying to do here. So my leaning would be it would probably fall more to the downside. I don't have a lot of faith in stocks right now to the upside. If I'm going to change the opinion on it, the market needs to show me that it intends to change its trajectory going forward. I just don't see any reason to believe that it's going to do that in the here or now. So also you got this little declining trend line weighing it down as well. So keep an eye on that. Let's see. What else you guys got? Kevin Hawthorne. We got Kevin from Lakeland, Florida. That's like not too far away. We got Chris Colvard. I'm super bullish on LAC on a fundamental stance. I would love for you to look at from a technical. All right. So this is your Lithium Americas Corp. So there's been a lot of popularity with lithium stocks of throughout the course of this year. Uranium stocks, it's kind of been a hit or miss. I mean, it has some significant rallies, some significant sell-offs. Kind of a hard one, kind of like energy in the sense that it's a bit hard to trade at times. From what I'm seeing here, though, maybe like a little bit of a cup and handle price action. It's not the cleanest, but you got like the cup and handle base here. So you got the cup going up or going down and coming back up. Nice little triple bottom there. So, and now you got this handle trying to form here, right there. So this is your handle, cup. I'm just outlining it for you, and then you got the handle. Then it needs to just try to break above this 30, I would say about 33.15. Does that, then yeah, I would say there's probably room for it to run up to like 39, maybe even close to 40. But it needs to get back above that 33.15 level. Good question, though. All right, good day, Ryan. Can you share? This is from Moikana. If I butcher names, forgive me. It's no offense to you. It's more my shortcomings and just being able to pronunciate names of most types. Can you share your outlook for Amazon and Snow, both relatively high IV stocks? What would be your weekly and monthly outlook on them for vertical spreads and cover calls? I don't really get too much into the options plays. Reason why I say that, because I know how to trade options and all that stuff, and I know the strategies, but I don't really consider it my forte. So when I do these live streams, I like to stick with what I know or what I'm confident in. And so I can give you an outlook on the individual stocks, and I think that can help you decide for yourself whether or not certain plays might be good. But let's look at the individual stocks. So on Amazon, this support level right here has been super key for it, and it's been holding it. So this 50-day moving average, holding like a champ. What are we talking about? 5 days here. Then you also have this like declining trend line that actually got broke yesterday, so we can go ahead and just get rid of that one for right now. I don't know if that's super important at this moment. Not seeing anything else there, but this support level is one I've been watching for a long time. It kind of almost filled this gap right here. Let me zoom in a little bit. This gap right there almost got filled, but I think it was like a few pennies off. Yeah, like 30 cents off or so. Market may consider that done and over with. I don't know, but nonetheless, just keep an eye on it. If it breaks support again, I would say that, yeah, it's going to fill that gap there. But right now, that is the key support level. If it can get, let's look at it from a 30-minute chart, actually. 30-minute chart kind of shows you like this potential base breakout, right? It almost looks like an inverse head and shoulders pattern. Left shoulder, but not quite. The head, and then this crazy looking right shoulder. So you got this layer of resistance. It needs to get above that. So maybe, I mean, looking at it on a 30-minute chart, you get it above 130.20 or so, it could be off to the races. And that could drastically affect the overall market too, because Amazon's a $1 trillion plus company. That's going to have a strong weighting on the overall market. Nick, what do you got to say, man? What sector do you like the most going into September, October? Thank you. Buying dividend stocks on sale at the moment. VFC, TD, purchase. Tuesday, I think select commodities will still run. I like coal too. All right, man. There's a lot going on with that one. So, Nick, sectors that I like right now. I mean, I'm not a huge fan of tech right now. I would say utilities probably still high on my list, despite the fact that they weren't really rallying with the market today. Not at all, actually. Healthcare seems to be very resilient for the most part. Staples, I like staples a lot. I think there's still some value there that a lot of people are finding as well. So those are probably the ones that I would search out for like September, October, which tends to be the worst months for the market in general. And then dividend stocks. I think dividends and stocks are really good to be focusing right now with your like dividend portfolios, not so much from a trading standpoint. Can't really do that with dividend stocks, but I'm always looking at them. I mean, some of them that I'm looking at, like for instance, like INTC, they pay a good yield. I haven't bought into it yet, but that's not a bad one. One that I've had for years, and it's not done me any harm. I usually try to buy it on some dips to increase my position size on it. Is DSU. That's been good for me over the years. Trying to think what else. You got others like KHC. Struggling a little bit, though. I mean, even again today, it's down like 3.3%. Just can't really find its mojo at all. KHC, you got MO, which is, you know, dealing with some government red tape and regulations. That usually pays out a pretty good dividend. One that I'm watching for, but it just won't come down enough for me, is CVX Chevron. Man, when you can get it like, you know, back down to like the 90, 95 level, then it starts paying out like a 7%, 8% dividend. I really like those a lot. So, but you got to be patient. You got to wait for the right time to get into some of these dividend plays. VFC though, I can't remember what VFC's dividend yield is, but man, this sucker cannot catch a break at all though, can it? Decline trend line still in place. I mean, it's just, this is your support level right here to watch on, or resistance level to watch on VFC. Can it get back above like 43.50? Let's see. What are your thoughts on XOM and PYPL short term? So PYPL was actually one I was looking at because I think it's one of the more intriguing charts out there right now. PYPL has a, and I didn't really see this coming at all until I just saw it on the charts. I was like, wow, this is actually setting up to the long side. This was the first trade that I made this year. And so it was like, it was a bad trade. I think I lost like 2 or 3% on the trade. I haven't traded it since. I haven't traded a lot of equities in general just because I've been short so much on the market this year. But you got a wedge there that has developed, and it's starting to break out of it right now. It's almost like a bull flag pattern, except it's a narrowing channel, so makes it more of a bullish wedge. But if this thing, you know, has some legs to it, good grief. I mean, I could see where it could get up to $122 a share. But, well, before I get to the but part, notice too, it's held up pretty well to some of the selling of late that we've seen in the market, you know, off of the August highs. It didn't really sell off of the market as a whole, so that's a good sign as well. I think there is definitely some potential for it to make a run into the hundreds, but it's going to need the market to cooperate some. Yes, we've got the market to cooperate over the last 2 days, but there's these things called dead cat bounces, which you can't really trust for them to be sustained. I do have like this feeling that we were in one of those right now, but long term, I mean, maybe this one is one of those things that it's starting to try to finally put in a bottom, because when you go back and you look at the chart, I mean, this has been one of the worst hit stocks out there, and it's a big company. I mean, 310 down to 96, it's lost 66% of its value, almost 70% of its value. So yeah, I mean, that's pretty bad. Let's see, what else do you guys have for me here? XOM. And I got a lot of thunderstorms outside, so hopefully I don't lose power here at all. That would suck, but if screen goes black, that would be the reason why. So XOM has been kind of stuck in this sideways range here. It pays out a good dividend still. I think it's like 3.7 or 3.8% or something like that. Again, better from a dividend standpoint. If you can get this thing to come back down to like 72 or so, that could be a really good opportunity for a dividend play. But right now it's stuck in a sideways trading pattern. I don't really see a reason to get long on it, but there's some other ones too, and I'm not saying these are the ones to focus on necessarily, but SLB, it's trying to hold that support level there. It's not done the best jobs with it, but you got a little bit of a breakout there going on today. SLB, very volatile play from the energy standpoint. You got Hess, it's trying to form a nice little bull flag there as well. So you got a few of those out there. They're not going to pay probably the same dividend that XOM is paying out, but from a swing trading standpoint, it's pretty interesting. What do you see Bitcoin year end? Year end on Bitcoin. Let's pull up that chart here. So bear flag, bear flag, bear flag, right? Then you got the support level here at about 17.5. That's where I think it's going to next. From a year end standpoint, I could see it going anywhere from, and I'm not the best forecaster. I don't think anybody can really predict anything with 100% certainty. I think the shorter term is much easier than the long term, but in a number of ways. But I think it's going to eventually challenge 17.5 at some point this year. If that breaks, then I'm looking at 12.2. Baba. Ricardo Mateus, did I say that right? Alibaba. Here I got some notes. I know that looks a little messy, but you can see there's a decline trend line there. So let me just show that to you guys. Whoop. show you what I'm talking about. Decline trend line there, rising trend line right here, that it's managing to hold pretty well. This is the range that it's trading in. Is there a move to the upside at the moment? No. It needs to get back above 112 in order to justify that. Is there the potential for a sell-off in the short term? Yes. I mean, it is sitting on two different key support levels. One that goes back to the March lows, the other one that goes back to July, or actually early August. They've converged together, so you're talking about like a move below $86 being very problematic for BABA. See, Paolo, man, you asked me about AMC, man. Here's the thing with AMC. These stocks, they tend to get these big boosts, right? Just out of nowhere sometimes. And then they make a new low. Or then they make a low. And then they get another boost. And then they make a new low. And then they get another boost. And they make a new low. And then you got the boost from August. And they make a new low. So if you get another boost, what do I think is going to happen? It's probably going to make another new low. I mean, this whole company has just got all sorts of problems to it. I mean, aren't they like gold mining now too, or something crazy? I mean, movie theater company. And I think a lot of times we're putting our faith in these CEOs and stuff. It's like, oh, you know, Ryan Cohen or whatever, or Elon Musk or whoever it is, Kathy Woods. They're not going to let us down, and then they let you down, you know. And so it's good when you're trading not to put your faith in the CEO. I mean, this whole ape thing, I don't even get the whole logic behind it, but what is it doing? It's trending lower. I mean, it hasn't been trading for that long, and then this is a 30-minute chart, but 30-minute chart's really one of the best ways to look at it right now because there's just not a lot of price history outside of it. But here we go again, man. I'm getting all sorts of crazy on this keyboard. I got to change some of the macros on this keyboard so I don't keep doing this to myself. But going back to ape, you see this here? It's just trending lower on the 30-minute chart. It's trending lower. So, you know, lower lows, lower highs. That's a trend to the downside. Do I look tired today? Don't drink that whiskey anymore, Ricardo. I'm a little bit tired, man. Well, my whole family came down with COVID a couple of weeks ago, and so I've been feeling that one still. I feel like I got this like tiredness about me. I've been tired probably for like the past week, really quite a bit. So, yep, you're picking up on it. Don't worry, I'm not contagious through the live stream though. I don't think I'm contagious now, anyways. In general, if you met me in person. So, Apple. But hey, you know what? Market's not going to close for us just because we're sick, so I gotta muscle through it. So Apple, you got this. It's one of the stocks right now that I don't see a lot of support for it in terms of a lot of your big FANG stocks like Meta, like Google, like Microsoft. There's a bunch of them out there. They all have like these huge. Amazon, we talked about that one already. They have huge levels of support underneath it, and they're jumping off of it. Apple is one of the ones that did really bad today, and it doesn't have any support underneath it right now until it gets to about this 151 low. At 151, I could see it maybe staging a rally there off of that level. But right now in the here and now, there's just not a lot to boost the stock. Oh, man, I missed out on snow. Sometimes I do that, man. I forget that there's like a double question there. Let's see here. Just looking at this chart here, just trying to see where the edge is. It seems like when we broke out, it kind of rode this decline trend line a little bit lower, and then it had that big gap up. So the big thing I think a lot of people are nervous about is this gap going to get filled? I mean, that's a big gap that's been left unfilled. It got kind of partially filled, but it hasn't filled it completely. I don't see much of an edge to the upside. I mean, you could make the case that it's kind of making this little rounded bottom off of the 20-day moving average, but that's about it. Is blockchain going to be the next big thing? I mean, here's one of my problems with the whole crypto environment. I'm not a hater of it by any means. I mean, I've traded it for myself before. I've never, put ideas or trade setups out there for it because I don't have a ton of confidence in my own ability to trade it because I think it's in such a rudimentary stage. There's still a lot to do on that on that front to make it to where there's much more legitimacy to where people are using it on a regular basis. My biggest concern is that anytime, and there's really not any examples of this in history, is that anytime that a currency that's not sanctioned necessarily by the government gets big, what do you think the governments are going to do? They're going to shut it down. You've already seen that in places like China and everything else, where they're not going to let a privatized currency, in a sense, become the main currency for the country. So I feel like the United States would probably be doing the same thing. If it became a threat to the dollar, what are they going to do? They're probably going to find a reason to regulate it to death, tax it to death, and then nobody uses it anymore. So that's my big issue there. Do I think it would be actually pretty cool if that did happen? Yes, I do, but I just have a very low level of confidence of it actually happening. All right. LNG, we can look at that one here. This one's done pretty good, huh? I mean, this thing has like no chill in it whatsoever. Just keeps going higher. I mean, this goes back to like the COVID lows. This is your base right here. Could see a pullback in that. If that happened, that could be a good bounce level off of that 150. Are we talking about like a little bull flag action there? That's possibly a bull flag. Good chance you're looking at a bull flag pattern, but if that is, then you know, getting long on it would require a move back above like 164.50. In any case, good questions out there today, guys. I enjoyed all of them. The market, it's definitely going to be a challenge right now, regardless if you're long or whether you're short. You get these big rallies, you get these big sell-offs, and in between, you're hoping that you're catching it at the right time, at the right place. I was telling you earlier, I got into QID today. That trade hasn't really worked out well. It could work out tomorrow. I don't know. That's why I'll follow my trading plan, of what I've set out for me to trade off of. But there's no like guarantees that you're going to time the top or time the bottom. That's not what I'm trying to do. What you really want to get is that chunk. If you're wrong on a trade, just get out of it, because you don't want a big losing trade to define your entire year. And when you're trading inverse ETFs or something else, it's very easy for that to happen. So in any case, keep managing the trades, keep putting out the good trading ideas out there. And we'll knock out this market together. See you again next week. Oh, and be sure to look at my current video that I put out last night, man. I need some more hits on that sucker. All right. Take care, guys.